All right, let's talk a little bit about gross income and how that compares to net income. What's the difference between them and what those words and some other words mean when we're talking about income and taxes and that kind of stuff. So first of all, gross income is just all your money, everything that you earn, everything that comes in to you as a form of income. So that might be your wages and your salaries. Might be income you get from a rental property you own, could be dividends you get from shares that you own, any other kinds of income that come in. There's a few things that don't count, sometimes things like prizes and stuff like that, but most of the income that you get comes in when you add it all together. Let's say you had 2 or 3 jobs, you add them all together and you've got what you call your gross income. We take away from that some things we call deductions. Now you don't even see these. All right, so your employer, the people who employ you, will take these out of your gross before you get any money. So these might be things like income tax, superannuation, which is money that gets taken out of your pay and put aside for when you retire to help fund your retirement, union fees, things like that. So your employer takes these out of your money before you even get it. And then what you have left over after they're taken out is your net pay. This is what you actually get. This is the money that goes into your bank account or the check, however it is that you get your pay. So all of your income minus the deductions that your employer takes out, and what's left is your net income, what you get paid. Now, you'll see in these deductions this thing called income tax. We want to talk a little bit about this because there's another couple of words that we use that are similar to what we've already discussed. I don't want you to get confused with these. So how do we work out, or what is our income tax? Now, tax is money that the government takes from your pay to help run the government and provide things like roads and hospitals, that kind of stuff. You start with your gross income. It's the same thing as your gross income that we talked about earlier. It's all of your income added together, all right? Minus any tax deductions. Now be careful because we've got the word deductions happening twice here. The first one we were talking about things that get taken out of your pay, but tax deductions are things that get taken away from your gross to work out your taxable income. And these are usually things that are just expenses that you incur that are related to your job, or expenses that you've had to incur in the process of making your income. So if you were a builder, it might be tools that you had to buy. Okay, if you were a delivery driver, it could be the fuel and wear and tear on your vehicle, because that's expenses, that money you've had to pay, but you've paid it in the process of earning your income. Sometimes also charitable deductions, so donations to some charities are tax deductible. Now, if we add all those things up, work-related expenses and charitable donations, and we take them away from our gross, what we're left with is what we call our taxable income. And that's the amount that the Australian Tax Office, the ATO, looks at, and they do a calculation, which we'll look at in another video, to work out your income tax and how much you have to pay. And that is the income tax that then is part of our deductions from your gross income when we work out your net. So I hope all that makes sense to you. There's some words in there that are similar, so just be careful when we're talking about deductions. We're talking about things that come out of your gross before your net, but tax deductions are slightly different. They are related to your income tax. All right, well done.